Hi, this is Dylan Taylor, Chairman and CEO of Voyager Technologies, and you're watching Taking Stock.
Two minutes ago, here into the closing bell for what is set to be another record-setting day here on Wall Street. The S&P 500, the NASDAQ, and the small caps once again, as they were yesterday, set to close at record highs following a huge drop in oil prices. West Texas and Brent both down about 7%. Their loss means extra gains and a boost for equities across the board. Who better to kick things off with for his take on today's tape than the great Einstein of Wall Street, Peter Tuchman. And it's not just all-time highs. Look where we are in terms of the intraday trading. We're set to close at record highs for the day.
You know, if you look at that, I mean, this is a perfect trend trade, right? This is like buying with conviction. People are not just haphazard. I mean, it feels like they're buying everything in sight, but, you know, they're buying with conviction. This is, look, I would imagine some of it may be a little short cover because it's a bit of a breakout, right? When you have this much breadth and this much acceleration in the rally, that's got to be a number of different things. People coming in, taking big positions, a short cover, because there have been people who are still betting on the fact that we're still in the middle of this conflict. Oil's been trading above 110, and that was putting such heavy weight on the market. But when you see this amazing risk-off trade where oil is completely down to levels that are reasonable and the market is trading so high, I mean, we're at Dow 50,000, we're S&P, we're looking at S&P 10 grand before you know it.
Yeah, absolutely unbelievable. All 7 of the Mag 7 tech stocks in positive territory. AMD up 18.5%. Itself a new all-time high. Einstein, thank you. Time now for the bell. The enthusiasm is high, the vibes are high, so are stocks. A record-setting close for the S&P 500, the tech-heavy NASDAQ, and the Russell 2000 for its first close ever above 28. Where'd the Russell finish? 2880. Your final tail of the tape. The S&P 500. There's a lot going on here today. The S&P up 1 point. Let's call it 1.5%. The Dow 30 up 1.2. The New York Stock Exchange Composite Index, huge gain, 1.1%. And the small caps in on the fun as well. The best performing of the major market indexes. The Russell 2000 up 1.47%. We mentioned AMD, the VIX, volatility taking a breather, reaching its lowest level going all the way back to February 3rd. Gold and silver ticking higher. Bitcoin reaching its highest level back to January 31st. In the Dow, a big day for the House of Mouse. We'll talk more about Disney stock in just a bit. It's the outperformer of the Dow 30, as was NVIDIA and Honeywell, while names like Chevron, Cisco, and Salesforce, your hardest hit names in the Dow on this particular day. Todd, let's get a walk here on the jump. We'll bring our viewers the latest analyst notes that moved the tape here on the street today. First up, Barclays upgrading American Eagle to an equal weight rating after the company reported quarterly results. Price target of $19. AEO down about 35% since the start of the year. Next up, Goldman Sachs upgrading AMD, appropriately so, to a buy rating from neutral. 12-month price target of $450 on the stock. AMD crushing the cover off the ball today, soaring to a new all-time high, up about 19%, Finally, Rothschild and Redburn upgrading Monster Beverage to a buy from neutral. They say they see positive catalysts ahead for the beverage giant. Shares are up only about 1% or so far year to date. We'll take a look at a few names that did very well here at the New York Stock Exchange today, and you got to start with the big dog in the Dow. I've been doing this a long time. You don't frequently have Disney as the outperformer, but a great earnings call, the first one since Josh D'Amaro took over as CEO. Strong quarter in streaming and theme park units. Company CFO Hugh Johnston saying we continue to see a strong consumer, and they say they have not really seen those growing fuel price concerns reflected in spending. Shares are down on the year, but up over a huge day, 7.5% here on Wall Street. How about Taiwan Semi, the 6th largest company in the world by market cap, also up more than 6%, reaching a new all-time high in the session. Investors waiting to see if Apple will stick with TSMC as its primary chip supplier over Samsung. The average one-year price target on this stock sits at $4.56 a share. That's upside potential of about another 10% or so relative to these closing levels. All this week here on the show and throughout all of our programming here at the New York Stock Exchange, we are bringing you continuing coverage of Consensus 2026 from the great city of Miami. Earlier today, FinTech TV's very own, their lead anchor, Remy Blair, caught up with CEO Adam Reeds of Leadin. Take a look.
Welcome to FinTech TV. I'm Remy Blair. Well, the Bitcoin credit market is moving into a period of institutional grade maturity. Bitcoin-based loans are a key part of this market as they do allow investors to use their stack to receive cash without selling their Bitcoin. Now, S&P Global Ratings assigned an investment grade rating to Ledin's Bitcoin-backed loans, and by proving that Bitcoin can be reliable collateral even in a crash, platforms like Ledin have helped turn Bitcoin from a speculative asset into a standard financial building block. Well, joining me live here in Miami is Adam Reeds, co-founder and CEO of Ledin. So thank you so much for joining me, Adam.
Of course, good to see you again, Remy. Thanks for having me on.
Well, great to have you here in Miami. So first, tell us why you did this when it comes to the rating.
Sure. So, as a platform that's been doing Bitcoin-backed lending for 8 years, we really spend a lot of time forecasting and making sure we have enough capital to lend out, of course. And so we're looking at the projections, and an analogy that I often like to make is Bitcoin-backed lending may develop like the residential mortgage market. And in the US, 60% of homes have a mortgage on them. And so when we look at the current market cap of Bitcoin being about 1.5 trillion, if 60% of that asset class needs a mortgage, that's $1 trillion of capital. And looking around, the only market that could support that amount of capital is the asset-backed securitization market. In the US last year, about 500 billion of securitization was done. Globally, it's about double that as well. So again, that size of market is what we need to support. And so we tapped S&P Global as one of the premier rating agencies to take on creating our first ABS structure.
And Adam, we are here at Consensus. You just came from Bitcoin 2026 in Vegas, and you and I were talking about where we are in the Bitcoin cycle. So I understand that there are a lot of use cases for Bitcoin, and everybody has an opinion when it comes to this crypto major. So tell us about Bitcoin as collateral.
Yeah, I mean, the exciting thing about Bitcoin is it's the same thing to everybody. And so because of that, it makes it the most pristine collateral there is. I mean, I love using gold as an analogy. Even though Bitcoin gets, compared to gold and being digital gold, gold, because it's physical, has to be jurisdictional. So if I try to finance gold in Argentina and walk it into my local bank in Argentina, I'm going to get different rates and terms than gold in, say, Switzerland, the premier place to store gold. So what's great about Bitcoin is, again, it's the same no matter where you have it. So for that reason, we can offer financing terms the same where we had it. The ABS that we did was actually the first ever bond structure that treated non-American borrowers the same as American borrowers, which was really groundbreaking for us because now we have something that can really pass on equal rates to everybody no matter where they are.
And Adam, for the layperson who is watching this right now, how would you explain Bitcoin credit market?
Yeah, I mean, I think when we were explaining it to investors on a roadshow, we really just thought about trying to change one variable at a time. So, let me make a comparison to auto loans, right? So, how is auto loans done? Well, individuals go buy the car, they sign a loan agreement, they do a credit score, they have a loan agreement, and then of course the car is being used in the environment, and there's companies behind that want to earn yield that are financing those types of auto loans. In our case, instead of a car, it's Bitcoin. But the better thing about Bitcoin is it actually sits in the garage of the lender, right? So we have the custody of it, which provides far better asset protection. So what's interesting is we're drawing these other comparisons to traditional assets, but Bitcoin, in our view, is far better collateral for these types of loans.
Well, Adam, it was great having you join us here at Consensus 2026. So thank you so much for joining us, and thank you so much for breaking all of it down.
Thank you. Appreciate it. Cheers.
Welcome back to the show. Delayed, not denied. The one and only, the great Phil Rosen, good friend of ours here on the show, joins us now. He is, of course, the chief market strategist at ProCap Financial. My man, it's nice to see you here as always.
Thank you for having me, JD.
We got to talk earnings season because a lot of these companies we were saying in the last block, talking about AMD and some others, they are crushing the cover off the ball right now. I wonder, do you think, is that the only thing that is driving the market to another round of all-time highs?
I mean, it's a huge catalyst right now. We have not seen earnings revisions like this for the second quarter in 5 years. We just saw analysts raise their expectations for Q2 by 2.1%. So typically, that doesn't sound like that much, but usually at this point in the year, they're lowering it by about 1%. So we haven't seen this since the end of the pandemic, and this is a very big catalyst, especially in light of the very dicey geopolitical backdrop right now that hasn't really come out as a bearish headwind yet because of the strength of earnings.
Is it too bullish too fast? What are they basing that optimism on right now? Because, hey, we still hear from the president who says, I'm not taking the possibility of military strikes against Iran off the table. That's the type of thing that got investors pretty skittish back in the month of March, and now it just kind of rolls right off the back in another round of highs.
Look, any time that you have everyone on the right side of the trade being either too optimistic or too pessimistic, you probably want to pause a little bit. But right now, these companies are getting so profitable, especially with the AI trade, semiconductors going absolutely nuts. I think these the semiconductor ETF SOXX, I think, is up about 40% in the last month, which is just an absurd run. And by any other year, you would look at that and say, okay, we should probably expect a pullback. But in this case, I actually don't know if that's the right call because of the strength of the AI trade right now.
Yeah, JC Peretz likes to say by the time it's consensus, it's probably too late, at least in terms of some of those analyst notes. What could derail the momentum right now? I mean, it's another, Tuckman and I were talking at the top of the show, the small caps, the NASDAQ, the S&P, we're now doing this almost like a daily thing for all-time highs. What are some of the voices of concern that you're hearing?
I look at this bull market, it is so resilient, so robust, and if the Iran conflict could not derail the bull market, then what could possibly be a bigger black swan event than that? I really don't know. If we start to see this AI spend not materialize, or if some hyperscalers start to come out and have comments that they're pulling back spending or not seeing the ROI that investors want to see, sure, that's a headwind, but we've been dealing with that potential bearish factor for a year already, maybe 2 years. And the Iran conflict, that is the biggest thing, and yet it did nothing pretty much to the momentum of the stock market.
The great Phil Rosen. The only bad part about this interview is that I have to wrap it because we have a very tight show today, but please come back anytime. Phil Rosen of ProCap, my man, thanks for being here. And now in our continuing coverage of all things Consensus 2026 down in Miami, Florida, earlier today, Remy Blair, the lead anchor of FinTech TV, sat down with the one and only Kevin O'Leary of O'Leary Ventures and Mo Bakashwain of BitZero. Take a look.
We are joined today by Kevin O'Leary, strategic investor in BitZero and chairman of O'Leary Ventures, and Mo Bakashwain, the founder and CEO of BitZero Holdings. Gentlemen, great to have you here. Thank you so much for joining me.
Thanks, Remy.
Well, Mo, let's start out with you because we all know that AI CapEx has been a theme that we're all focused on. So tell me about the pivot.
So I'm not sure if you saw the announcement we made yesterday that crystallizes BitZero's direction into serving the demand that we see in the market for AI compute. Our assets are strategically positioned to leverage that demand with scale that we've been building over the past years ahead of the market catching up to what we've been doing or to the demand being as much as we see it today. The announcement we made yesterday is BitZero's statement that we are leveraging our assets in the best interest of our shareholders at any given cycle, whether it's AI, whether it's crypto, whether it's quantum tomorrow. We will leverage every power source at our disposal, add to our assets as much as we can as we go ahead. This is one of many agreements we anticipate to have in our assets. Norway is up to 300 megawatts. This is just 110 that we've already announced that we're doing. We're pursuing other discussions about the expansion in Norway. Our Finland site is actively being worked on with CBRE, Red Engineering. We're working with the best-in-class engineering teams and houses like CBRE, Turner & Townsend, which are going to give us an edge also working with the clients that we seek to land for our capacity now and in the future.
Yeah, and Kevin, you have been beating the drum on BitZero for years. And when we're talking about 2026, I think geopolitics have been front and center as we monitor the situation in the Middle East. So why BitZero and why do they have an advantage when it comes to environmental as well as geographic advantages?
So BitZero, my investment thesis was, as in other investors are definitely coming to this theme, is they have power. They have power contracts at very, very attractive prices. So a company like BitZero that has power, land, permits, fiber, becomes very attractive to many, many, many different constituencies. In addition to that, which is almost serendipitous because nobody knew war would break out in the Middle East, you now want a geography with very good stability. Because if you're going to spend billions of dollars building whatever you're building, or do whatever you're doing with that power, whether it's manufacturing or whether it's building AI compute or whatever it is, you want stability. And of course, Norway and Finland are legendary for that. But there's something else that is also interesting about what occurred yesterday. And I think a lot of investors like me are very concerned about, not concerned, but we scrutinize for this. So many people are running around the world saying, I'm building a data center here, I'm building a data center there. But they never seem to land LOIs, letters of intent, let alone binding LOIs, which means not only has some negotiation already done towards a lease, but the economics are understood. And so what BitZero announced yesterday was over $100 million deal. It kicks in. I mean, we should ask Mo when my assumption, the market's assumption, sometime next year at the back end, right?
Yeah,
Around Q3. So we expect this to come to fruition upon completion of the lease. We expect it to take 12 months. So somewhere falling in Q3 27, where we start cash flowing on that lease. It will be approximately 170 million per annum in revenues. Out of that, the operating expenses are not the significant portion. So we'd be looking at an expected EBITDA of approximately 150 million per annum, which puts BitZero in a completely different sphere and changes our size completely and puts us in, like, instead of a speculative power asset and mining, we would be a full compute platform that will leverage its assets for AI and any other industry. Being a compute platform today, I'm sure you see the market multiples, Remy, every day.
Absolutely.
That's basically where it is.
Well, Mo, it was great having you on the show. Thank you so much for joining us.
Thank you.
you're good. All right, welcome back to the broadcast. Time now for a few headlines in the worlds of fintech, crypto, and artificial intelligence you need for your Wednesday afternoon. First up, the crypto majors are split, but Bitcoin up about 9/10, reclaiming 81,638. Next up, NVIDIA and ServiceNow both launching a new desktop AI agent platform, combining productivity gains with built-in security, all in an effort to better prevent data leaks and uncontrolled actions. And finally, Anthropic and Fidelity Information Services developing AI agents to analyze transactions and build cases against money laundering and fraud, aiming to cut costs and speed up investigations in financial services. And now in our continuing coverage from Consensus 2026 down in Miami, Florida, earlier today, Remy Blair caught up with the one and only Adam Back of Blockstream. Take a look.
Well, Adam Back is British cryptographer, the CEO of Blockstream, and he joins us now. Adam, great to have you here. Thank you so much for joining me.
Certainly on.
Well, are you Satoshi?
No, it's a common question, and I'm not. And I think that remains a mystery for the future. As Satoshi stepped away in 2011 for participating in the forums, there's effectively been no new information or forum posts for people to analyze. So it's kind of a cold trail at this point.
And we are here at Consensus 2026. The focus is on convergence, what we're seeing between DeFi as well as TradFi. And a lot has changed since Bitcoin first emerged. So where are we right now?
I think the institutional interests, so the sovereigns, the people buying the ETFs, both institutional and retail, and the pension funds, it's mostly Bitcoin focused off the crypto assets, right? And I think that's because they are kind of long-term tactical investors, where the other crypto assets are kind of more speculative in nature. So, no, I think it's, most of those Bitcoins are held in custodians, no doubt, but it's all about accessibility. So for certain groups of investors, that's the way that they interact with their investments. And so, it's all about giving the average person access to Bitcoin. Some will be able to do that via ETFs or their advisors. Ultimately, many don't make self-directed investment decisions, and so they will benefit via the model portfolios as they roll into mutual funds, managed funds, pension funds, and things like that. So I think that wave is still ahead of us.
Yes, and you've actually highlighted how easy it is to access Bitcoin now, whether we're talking about directly or indirectly as an investment. But as a cryptographer, I do want to get your take on the threat of quantum and Q-Day that we've all been hearing about. So can you separate the actual facts from some of the noise?
Yeah, I mean, so for ourselves at Blockstream, we have a research team that's been working on quantum for over a year now, and we have a number of papers and a specific proposal for a Bitcoin optimized version of the NIST standard, which was released in October 2024, so quite recently. I think that's a reasonable path for Bitcoin to add another signature scheme. It already did add one in 2021, so there's a precedent. And that would then be an opt-in way for people to be quantum ready without paying the cost of the big signatures today. So I think that's important because you don't want people to have a kind of cost deterrent from adoption. Then hopefully we can get a visibility in the market of how many people are ready and adapt from that in the future if the rate of hardware progress speeds up. To date, it's been relatively slow. The current state of the hardware is rather basic in terms of what it can compute. But there's genuinely interesting physics research being done. So I think, the market is, with very esoteric topics, very specialized topics, a tendency to overreact or, to read too much into marketing output from technology firms looking for fundraising ultimately. So I think realistically it's next decade at the earliest, not this decade, but we'll see how it progresses.
And finally, before I let you go, Adam, we've been hearing about a lot of partnerships as well as announcements so far here at Consensus 2026. But when you look at sentiment, as well as some of the conversations that are actually taking place on the ground, give us an understanding of how you would gauge the temperature as well as the sentiment.
Yeah, I mean, I think there continues to be robust news flow on the kind of open for business regulations that track is progressing. domestically within the US and internationally. Um, quite a bit of news flow of large financial institutions, providing Bitcoin. So we just hear that E-Trade is adding Bitcoin to 8.6 million clients with a lower fee structure since some of the main crypto exchanges in the US. So that's attractive. I think, for individuals, it's interesting to look at the balance sheet of where you're trading from a risk perspective, post FTX world. Also the trilateral agreements where people are starting to separate the custody from the exchange, which has always been the case, for 100 years, probably in a traditional world, but that model is coming into Bitcoin, which I think is good for security and confidence. And then, as I say, the institutional adoption, the actual placement of Bitcoin into managed portfolios, I think that's all still ahead of us. So I think the market kind of got ahead of itself and assumed that would impact the price last year, but I think that's still to come, into this year and next.
Thank you so much for joining us today.
Thank you.
Welcome back to the show. And now Money 2020's very own Scarlett Sieber is back with a whole new edition of Jargon Translator, where she puts complicated finance terminology into language that anyone can understand. Take a look.
I'm Scarlett Sieber from Money 2020, and this is Jargon Translator. Today's term lives where finance meets physics. Latency arbitrage. Latency arbitrage is making money because you receive information faster than someone else, sometimes by literally milliseconds. Prices update across markets constantly. If you see that change first, you can trade before everyone else catches up. That speed advantage might come from faster data feeds, better infrastructure, or servers physically closer to exchanges. Yes, geography does matter in this case. Latency arbitrage isn't about predicting the future. It's about arriving there first. Firms spend millions shaving microseconds off execution time. The margins are thin, but at scale, speed becomes profit. It's controversial because access, it's not exactly equal, but it's also integral to modern markets, fueling liquidity and price alignment. Latency arbitrage turns time into money, quite literally. So with that is your jargon translated. If there's a finance term you keep hearing about and want the real story on, put that in the comments. It might just make the cut. And with that, back over to you.
Knicks and 76ers game 2 tonight for that round of the playoffs in the NBA. Tomorrow on Wall Street, the latest results from McDonald's, Datadog, Vistra. After the bell, CoreWeave, Open Door, Coinbase, and Rocket Lab. That'll do it for today's edition of Taking Stock. Thanks for watching. Go Knicks. We'll see you again tomorrow.